So, what happens when the biggest buyers in the world decide the official price of something, well, isn't the real price anymore? We're about to dive into a story straight from a silver producer that shows a massive shift happening in the market right now. It really all boils down to this one simple but kind of baffling question. Why on earth would somebody offer to pay you 20% more than the going market rate for something? It just doesn't add up, right? But believe it or not, that's exactly what just happened with physical silver. And we're not talking about a couple of cents here. No, we're talking about offers that were around $10 per ounce over the listed price. What this tells you is that someone, somewhere, was desperate to get their hands on actual physical silver, and they were willing to pay a whole lot extra to get it. The real question is who and why? All right, so let's set the scene. Our story kicks off at a silver mine down in Peru. They were just getting up and running when, completely out of the blue, the phone starts ringing off the hook with some very, very unusual proposals. Now, this isn't some rumor from an anonymous blog post. Nope. This comes straight from the horse's mouth. The person telling the story is David Stein, and he's the CEO of Kuya Silver. It was his company that got these calls, so we're getting a direct, first-hand look at what's really going on. Let's look at the actual numbers, because this is pretty wild. On a Friday, David's company got an offer that was way, way above the New York market price. Then, come Monday, it happened again. Another call, another huge premium. This wasn't just a fluke, you see. This was a pattern. Okay, so that brings us to the million-dollar question. Who is so eager to get silver that they're willing to pay this much for it? And the answer, well, it tells us a whole lot about the global scramble for physical metal that's happening right now. These calls weren't coming from some small-time speculators. They were coming from huge industrial players. We're talking two large, very respectable firms from China, one of them being a solar panel manufacturer, and another big firm from India. So the demand is coming directly from the biggest industrial silver users on the planet. So why the massive premium? Well, David Stein told us exactly why, in his own words. He said these companies are trying to get the metal directly and circumvent the middleman. They're done with the usual process. They want to go straight to the source. Now, cutting out the middleman and bypassing the traditional market, that is a huge deal. It's a major strategic move. So let's connect the dots here and figure out why they're making the shift. Think about it this way. The old way of doing things was pretty simple. A mine sells its silver to an exchange or a middleman, and then someone who needs it, like that solar panel maker, buys it from them. But in this new approach, that whole middle layer is just gone. The end user is going right to the mine to lock down its own supply. This is a fundamental change in how things work. And, this isn't happening in a vacuum. These calls started coming in right after weeks of reports about a shaky silver supply in China. And let's not forget, China and India are the number 1 and number 2 silver consumers in the world. China needs it for industry, think solar panels, electronics, while India's demand is huge for jewelry and investment. Both of them are scrambling for metal. By the way, if you're finding this story interesting, please take a quick second to like this, share it with a friend, and subscribe so you won't miss any of our future updates. It really helps a lot. So the big question becomes, was this just some weird one-off thing that happened to one mining company? Or are we actually watching the beginning of a major, major shift in the entire precious metals market? Well, according to David Stein, this is absolutely not an isolated incident. The buyers told him straight up that they were calling other mines in the area too. This sounds like a coordinated, widespread effort to lock down physical silver wherever they can find it. The main tool these companies are using is something called an offtake agreement. Now, that might sound like some fancy industry jargon, but it's actually a pretty simple idea. It's basically a deal where a buyer agrees to purchase all of a producer's future supply, sometimes even before the silver has been pulled out of the ground. It's a way to guarantee you get what you need later on. What we're seeing here with silver is really part of a much bigger trend. We've already seen companies like Tesla going out and making their own direct deals for battery metals like lithium. And now it looks like solar manufacturers are doing the exact same thing for silver. The people who use the metal are taking control of their own supply chains. So when you put all these pieces together, what's the big takeaway from this incredible story? What does it all mean? Let's just walk through it one more time. First, a silver mine starts getting these crazy offers way above the market price. Second, we find out the buyers are massive industrial companies from China and India. Third, their goal is crystal clear: cut out the middleman and get the physical silver themselves. And finally, this isn't just about silver, it's part of a much bigger global trend.
And that leaves us with one last really crucial question to chew on. When the world's largest and most informed buyers decide that the official price on the screen is no longer good enough for them, and they're willing to pay a huge premium just to get their hands on the real thing, what does that tell you about the true value of physical silver? It's definitely something to think about.